Hello, everyone. My name is Ben Gagnon. I'm the Chief Mining Officer of a little company called Bitfarms. We do about 1.5% of the Bitcoin hash rate every day, based out of Canada and Washington and Paraguay, Argentina soon. How are we all doing today? Woo! Are we feeling bearish? No bears. Are we feeling bullish? Hell yeah, we got some bulls in the house. That's good. So we got a very important person coming up right now, Greg Foss. He's doing a lot of really cool things in the Bitcoin mining space, mostly in Canada, developing out great power opportunities, great mining facilities. And his talk is called Bitcoin, the Perfect Option. Now, I don't know entirely what Greg is going to talk about, but Bitcoin really is the perfect option for just about everything on the planet when we're looking at its woes, isn't it? We're looking at the incentive structures that are causing all sorts of chaos and all sorts of disruption and all sorts of issues that people have to live out in their lives. Bitcoin does seem to be the solution to all those problems. And especially when it comes down to energy and electricity and the ability for people to work and generate good economic activity, Bitcoin is the perfect blend of all these different assets. So without further ado, I'm going to give it up for Greg. Woo! Nice to see you.
Great to meet you.
Yeah.
Let's talk later.
Yeah, absolutely.
Hi, everyone. I want to start by thanking Tone for having me up here. I'm 58 years old. I spent 30 years in the risk management business as a high-yield bond trader and a credit risk manager. So I am not going to come up here and talk about Bitcoin mining. What I am going to come up here is trying to empower you with some of my experience. Spent 30 years trading risk through 4 successive financial crises that will change our lives. So if you'd allow me, I didn't put together any slides because the world has changed so much in the last 2 months that when I was invited to this conference, I didn't feel that I could put something on paper that would be consistent with the life I'm living right now. So I started my career as an engineer, McGill University, Montreal. I am from Canada. And then I went to do an MBA at Cornell University in upstate New York. Unbelievable experience. Got to meet some incredibly cool Americans, understand the culture difference between our two countries. And there are some substantial cultural differences, and that's important. This is such a great conference, okay? The Bitcoin community is the coolest community I have ever met in my career. The amount of talent, the amount of young people that I met last night, 16-year-old right here, come up and says, "Thank you so much for teaching me or enlightening me with your experience." And that means a lot to me. I have 3 kids, all right? The USA is the greatest fucking country in the world, okay? You are our last hope. Canada is fucked, 100% fucked, okay? And I'm a proud Canadian. So I'm gonna start with some facts. Peter Schiff's a fucking idiot. Another fact. Bitcoin is the best asymmetric trade opportunity I have ever seen in my 30 years of managing risk. So Peter also did the math, but was too conflicted to generate the proper conclusion. Don't be like Peter Schiff. Your kids deserve better. Okay? Third fact, Justin Trudeau is a child. What happened in Canada with the Canadian truckers, which was near and dear to my heart, and I actually have a $300 million lawsuit against me, is unbelievable support from the Bitcoin community. We love you. Now, I wasn't anti-vax. I was pro-freedom. And my good friend Jeff Booth and I vouched for the fundraising campaign in Bitcoin for the truckers. And we got messages of support from around the world. And all I can say is, thank you. I sincerely mean that. Listen to this presentation, please, and remember one thing. Our kids need Bitcoin because it is the hope for freedom in the world. So let's, if I may, I'll give you a little bit of my history. I was an engineer. I liked math, but I knew I didn't want to be a practicing engineer. I went down to Cornell, and I became a financial engineer. I came back to Canada, and I worked for Canada's largest financial institution, the Royal Bank of Canada. Now, there's a lot of Bitcoin maxis out there, and maybe some of you are in the audience. They have what's called a FOSS bingo card. You got to love these guys because the bingo card are squares, and every time FOSS says something that he continues to say, you can cross out a square and then yell bingo. Fuck you guys, okay? Because at the end of the day, I need to repeat shit because most of the world is so stupid that they don't get it the first time, the second time, or the third time. So listen the fuck up, okay? I am going to tell you it's grade 11 math. Cross that off your bingo square, please. Grade fucking 11 math. Why? The world is in a debt spiral, D-E-B-T spiral, and it's as simple as this. Total global debt to global GDP, so this is going to be a ratio, is 4-to-1. Your global GDP is your tax base, right? Your total global debt is 4 times your tax base, GDP. Put an average coupon on the debt, I'm going to say 3%, which is low, but that includes all debt. 4 times 3 is 12%. Your numerator is growing organically at 12% relative to your denominator, global GDP. Is global GDP going to grow at 12% just to keep pace with the organic growth of the coupon? Not even fucking close, okay? And I swear a lot because I'm a trader. But at the end of the day, that's as simple as it is. So what is the error term? How do you solve the debt spiral? And you know the answer. You gotta print money. So there's very few things that are 100% certain in life. But I am 100% certain that fiat money will continue to debase, and it will continue to debase on an accelerated basis as the irresponsible governments continue to add to the deficit, which is your numerator. Anyone have any questions on grade 11 math? I'm serious. Because math is the base layer of language. And if you don't understand the base layer of language, you're in big trouble. But most of the world does not understand the base layer of language. It's really quite pathetic. However, 30 years of financial risk management started at the Royal Bank of Canada in 1988, Canada's largest financial institution. And the Royal Bank of Canada was insolvent. Holy shit. Latin American debt was trading at a level that if they had marked to market their book, the book value of equity of Royal Bank of Canada was vaporized. Wow. I didn't spend 6 years of university to realize the fiat Ponzi was alive and well. But Royal Bank of Canada wasn't alone. Chase Manhattan, Bankers Trust, Manufacturers Hanover. Notice these are all U.S. banks that combined. We're all in the same boat, and U.S. Treasury Secretary Nicholas Brady had to come up with what's called the Brady Plan. That was my first financial crisis. I went to the CFO of the Royal Bank of Canada, and I said, Emil, that's who I was working for, the CFO, we have a problem. You know what his answer was? I know. Don't tell anyone. Now, I'm not kidding. In 1988, I was exposed to the fiat Ponzi. Now, what's a kid who's 25 years old going to do? Run out to the Wall Street Journal and expose the financial system? I wouldn't get far, would I? Mainstream media would shut me down. I'd never work in finance again. And I had some student loans I had to pay off. So I have essentially been looking for the solution to the fiat Ponzi for over 30 years, and I finally found it in Bitcoin. And Bitcoin is the perfect financial option. Bingo! Hey, I don't have an accent, you know, but I love you, man. I've been a huge fan of all these guys here. I'll just say this. I don't even know what to say, but bingo, I love you. Okay, so look, financial risk. I have 13 minutes to try and teach you the most important thing that I'll leave this stage with. Bitcoin is insurance. Therefore, Bitcoin is a risk-off asset. When the world is unraveling, you buy Bitcoin. You do not sell Bitcoin, despite what the big hedge funds in the world will have you believe on a correlation basis. Now, Bitcoin actually had a good week this week, even though today was a bit of a down day. The machines are trading Bitcoin due to their correlations with other assets. Machines are programmed by humans, and humans have many weaknesses. But I need you to understand this. Bitcoin is long volatility. I'm going to say it again. Bitcoin is a long volatility asset. What is volatility? Measured very simply by things like the VIX. The VIX takes the staircase down, a measure of risk, declining risk, and it takes the elevator up, doesn't it? You need to own protection against the unraveling of the financial system, owning long volatility assets. Equities are short volatility. Credit is short volatility. Bitcoin is long volatility. Bitcoin is the equivalent of being short sovereign credit risk. It is the most beautiful instrument I have ever seen for trading credit risk and protecting yourself against the inevitable unraveling of the global financial system. Once again, Bitcoin is long volatility. And despite what these hedge funds knuckleheads out there are going to tell you, like Gary Black, that it's a long duration technology stock, Gary Black has not done his homework. Please do your homework and understand why Bitcoin is long volatility, and then, more importantly, why it's the perfect option. So let's run through some quick financial terminology. When you price an option has value when it has time. The longer the time frame, the more value the option. The option has value when it's volatile. The higher the volatility, the more value the option. Well, Bitcoin is a contract with no theta, no time evaporation, if you will. Bitcoin is an infinite contractual obligation. Infinite theta is very, very valuable. Think of your equity options of expiring in 3 months versus 9 months. Everything else being equal, the 9-month option is way more valuable than the 3-month option. Bitcoin has infinite theta. Wow. Secondly, Bitcoin is long volatility. I've explained that to you. Bitcoin has no counterparty risk. I don't purchase my insurance from a counterparty that could fail. Having lived through the great financial crisis in 2009 at a hedge fund, if I had insurance contracts with the likes of a Lehman Brothers, how valuable was that insurance contract? Fuck, it wasn't. I had to go out and buy protection on my insurance provider. That's called contagion. And that's how financial markets unravel. Now, I'm going to get really geeky with you. Global central banks believe in something called the Fed put, right? Alan Greenspan started the unwritten rule that if equity markets fell by 20%, the Fed would come in and rescue equity markets. And there's no bones about it. Global equities march to the tune of the US equity markets. So essentially, all equity markets and all central banks are beholden to the Fed. Essentially, all global central banks believe in the Fed put. In other words, the Fed is going to rescue the global financial markets, and other central banks are going to be skated out of jail. Here's the geeky part. What happens if the Fed put doesn't work? Because there will be a time when it doesn't work. You need to own insurance. Heck, what could that insurance be? Oh yeah, Bitcoin. So it's my thesis that global central banks are going to start buying Bitcoin as insurance on the Fed put. Essentially a put on the put. It's called gamma, you engineering geeks. And gamma is the most beautiful of the option Greeks. Gamma produces face-melting rallies and makes you wish that you understood that $40,000 a Bitcoin is a fucking rounding error. And if you don't own the cheapest insurance available to you in this day and age, you failed risk management, and you probably own Peter Schiff's gold fund too, don't you? So I can take a few questions. I wanted to finally to say one thing. I'm here in Las Vegas, first time in Vegas. Lots of bond traders would come here all the time. I was like, dude, I spend my life trading risk during the week. I don't need to spend my weekend doing it as well. But what a great town. Met some great people. Dennis and Natalie, I've been on both of their podcasts. They were just up, obviously. This community is full of people that care with their heart. And one local guy that I want to point out, James Lavish, a good friend of mine, who also a hedge fund manager, lives in Vegas. Both of us have experience that doesn't get taught in school. And both of us are trying to impart our experience as best we can. And I do it like I swear a lot and, I'm fat and I'm a bulldog. But at the end of the day, I do it because I care. So forgive me for swearing. I have 3 kids. They need this solution. Okay? I am so grateful to have met you people. Tone, thank you for inviting me. A couple of questions. I see I have 5 minutes. If not, happy to get off and get the conference back on track. But remember one thing. They don't teach you this in school. You have to sit in a risk chair. You have to know what it feels like in March 2009 when I was riding the train to work and I was certain the financial system was over. That is not a fun situation to be in when you have 3 kids. It happened to me in 2009. I now have an insurance product that I dutifully stack for the future of my children. Am I 100% certain it'll work out? No. But I play probabilities. That's my whole career. So, my price target on Bitcoin, it's a target, not a limit, is $2 million US per coin in today's dollars. Okay? That's only math. I could walk through that math with you, but very simply, understand that at $40,000 a Bitcoin, where it's currently trading, versus my target, the market is giving me a 2% chance that I'm right? 40,000 divided by 2 million, 1/50th, 2%. I'm a probabilities guy and I'm in Vegas. Ship it in, you fucking idiots. 2%. I'm not 100% certain, but I'm way more certain than 2%. You can play roulette, you can play cards, you can play poker, all the same thing. It's called risk management. At $40,000 a Bitcoin, this is the best asymmetric investment opportunity I have ever seen. Any questions? If not,
come on up, guys. Got a mic right there. Got 5 minutes for questions. Great job, Greg. Thanks for coming.
I think I know the answer, but because of the volatility, there's a lot of yield you can get selling calls on Bitcoin.
hey,
And I'm just curious if you think that's a viable solution, or is your
not with your whole book. No, but look, selling vol when you're long volatility makes sense because Bitcoin is a long vol. Selling vol when you're already short volatility, which is equity shorting vol, that's a recipe for disaster. I know a guy who now needs to work 7 more years because he was in a short vol strategy, basically selling volatility on equities, and volatility spiked during the pandemic from 15% to 80% annualized. Horrible strategy.
They have to be covered the way that I do it. So
it's all good. Again,
okay.
But you are selling vol on a long volatility asset. That's smart. Selling vol on a short volatility asset, that's doubling up. You're doubling down. That's a dumb strategy. So great question.
All right, anyone else? Last chance. Oh,
What?
we got
There's
one
one
more.
over
We
here.
got Sasha.
Go ahead. The question is, how would I hedge being too long Bitcoin? I'm going to give you the pocket answer. What's too long? So look, the answer to me, I am not 100% invested in Bitcoin, okay? That's not the way I manage risk. The reality is, if you own 0, which I don't think anybody in this room does, you're doing well. You don't need to be 100% in. Because if Bitcoin goes to my price target, a 10, 20, 30% position in Bitcoin, you're going to be just fine. And the other 80, 70, or 60% exposure that you have, whether it's other long, hard assets, just do me a favor. Do not own any bonds. Anyone who owns bonds failed mathematics. You need to borrow money right now, not lend money.
I just wanted to understand when you said Bitcoin's a risk on, how do you, risk off?
Yes.
I thought it was a risk. I might have misunderstood what you said then, because in 2020 in March, when
Yes.
the hedge funds all, it went down to 3,000, I was really surprised by that, and I couldn't really explain it other than these hedge funds
Yes.
have now kind of taken
Great question.
over.
So look, it's an education process. You heard Natalie say it. Right now, there was one meaningful day this week where Bitcoin showed its true value. Financial stocks were cratering. JP Morgan down 5%, Bitcoin up 5%. Part of it was a gamma squeeze. Everyone is short Bitcoin. Bitcoin, again, though, is correlated with the risk on assets because of the machines, not because of the people who have done the work. This will take a lot of time to permeate the investment community. But yes, right now, Bitcoin trades highly correlated to other risk assets. Good question.